David Pierce is Managing Director of GPS Capital Markets. David, very nice to see you. Just a quick word on this Twitter situation. If you were a Twitter shareholder, you may well be one. In fact, it'd be good if you could tell us if you are. Would you be biting Mr. Musk's arm off so far?
Well, to be frank at the first, I'm not a Twitter shareholder. And if I was a Twitter shareholder, I would definitely be wanting to take his offer. It's amazing how much difference a weekend makes. On Friday, we had everybody and their dog talking about how they did not want to take Elon Musk's offer for Twitter. And on Monday this week, everybody was more than anxious to take the money and move forward. And I think some of the big losses we saw in the stock market on Friday put a little bit of fear into people. And people, when they're especially talking about tech stocks, they're a lot more worried about where they might be going in the future. And so this offer for Twitter looks really good right now.
They didn't really believe in the growth story, I've got a sneaky feeling, and a company that's lost money significantly over the last couple of years, struggling to get anywhere near its subscriber growth expectations, and could well have some interesting figures this Thursday as well. Do you think people are giving up on the old rationale for investing in growth and wanting a little bit more evidence of profitability now?
I think that there's something to that, and especially when we are looking at a time in our world where we've got wars going on. We've got, issues with we've had pandemic going on, and we've got a kind of a resurgence of COVID going on in China right now, where they might be locking down Beijing, which could, really impact what's going on in the world economies. We've seen some slowdowns going on in the UK, for instance. It doesn't look like we're going to get some more interest rate hikes over in the UK, and that has shown in the weakness of those currencies. The Chinese renminbi and the British pound, the euro have all been weaker against the US dollar on the back of those things. So I don't think that there's nearly as much bullish sentiment in the marketplace right now as we saw even 2 weeks ago.
David, can I ask you about the inflation story? Because we are sitting back watching this China's story, but it feels as though we haven't fully seen the impact of the supply chain hit this time round. It's a bit of a COVID repeat story for the world when it comes to those log jams. What does that mean, though, for central banks that are trying to get through some of the pandemic noise, trying to judge what the supply shocks are at this point, but also drive up interest rates?
Well, I think that there's a lot of fear right now because let's start with the United States. If we look at where we are growing dramatically, and our inflation is kind of out of control. And it's not just the price of oil; it is everything in the supply chain. My wife, here's a weird anecdote. My wife, she makes soap, and she buys a lot of oil for soap. Well, a lot of your safflower, sunflower oil, and rapeseed oil comes out of Russia and the Ukraine. Well, because we can't get that, a lot of people have been demanding palm oil. Well, so Indonesia yesterday banned the export of palm oil because it was getting so expensive for them. It is impacting every aspect of our lives and little things that you don't even think about. And then when you start talking about China, and they've got another COVID round going there, and they might shut down Beijing, and they might stop a lot of the manufacturing that's over there, that is too early to tell right now. But even now, there are companies that were used to getting product out of China in 5 and 6 weeks, and they're now talking 5 and 6 months to get their product. So everything is behind, everything is delayed. Supply chain is still a huge issue, and I don't think that we have solved that. And if we have another round of pandemic, it's going to exacerbate that. And I'm not sure how we're going to continue to grow our economies and continue to make things and buy things, and how I don't know that the demand can sustain all of this if we are not producing things and we're not able to ship things around the world. And we're seeing a lot of that movement in the currency markets right now.
And David, it's a great example about your wife's business, because putting up interest rates doesn't seem to help solve the issues of getting the product back into the company and fulfilling demand at this point. So what do we see from the central banks, do you think? Is the market right in pricing in a fairly hawkish path from here, or do you think we're going to be derailed because of the growth story?
Well, I think in the United States in particular, we're definitely going to see a 50-point hike and probably another 50-point hike soon thereafter, because we do have such quick growth going on in every market, really, whether it's housing or infrastructure, everything is going up in price. So we're going to see those interest rate hikes. But it could really precipitate a turnaround in the economy and slow things down so much so that they might have to back those off very quickly. It is a really volatile situation right now, and I don't know that anybody 2 years ago could have imagined what was going to happen with this COVID pandemic. It was just not in the cards, and nobody would have thought that everybody was going to be home for 2 years and what that would do to our kids and what it would do to supply chain issues and stuff. Those are the unknowns that I think that we're going through right now. We got a little bit of stability with Macron winning the election over in France, and it seems like that has added some stability to the euro and the European Union. But at the same time, we saw disappointing numbers out of the UK, and so we've seen some weakness in the British pound, and that helped pull the euro down with it.
There's a lot there, David. Thank you so much indeed for joining us. Monday evening where you are, just around about 24 minutes past 11 in wonderful Utah. Thank you very much indeed, David.
Thanks a lot
for joining us. David Pierce, Managing Director, GPS Capital Markets.